Okay, round two. I guess we're having technical difficulties of Ben joining. So let me try this again and invite him. I was just saying that there's a lot of amazing things in the real estate market going on today that we can't wait to share with you guys. A lot of fun and exciting or opportunities that I'm really happy. Send request. Oh, he will be coming on live. I hope you guys are having a good summer. I'm so glad the sunshine is out today.
Woohoo!
It worked.
Yay!
Yeah. That took a second because that was not allowing you to join. So I was like,
what's
okay.
going on there?
So it's
crazy.
2:00 on Tuesday with two of your favorite people in real estate. That's our new tagline. 2 on Tuesday with your two favorite people. Okay, so we got some exciting things to cover today. There's lots of opportunity in the market. I feel like we've been a record repeating over and over and over again these things, but I think people are starting to actually wake up to it a little bit and see the opportunity that's in the market, especially for buyers looking for closing cost compensation, all those types of things. So you ready to jump into it?
I'm ready.
Awesome. Okay, so I first wanted to talk about the Puyallup real estate market. Just we can do all over the place, but I like to be able to talk a little bit about that. So while we're pulling that up, I got it. So as of the last 90 days, I wanted to look at Puyallup and see what's specifically going on. So their average homes price per square foot, like per square foot, 2,281 square feet. The 4 bedrooms, 2.5 bath. They're selling right around 626, 608, but this is all of Puyallup. They're about 47 days on market. And then when you go up a little bit more in price point, it looks like 4 bedroom, 2.5 bath, another 2,200 square feet, was 27 days on market, but ended up selling for 590. And then the higher price points, only about half of them are actually getting sold. But there was 403 active listings right now in the Puyallup area. 183 of them went pending. So we're looking at a 2.2 month inventory supply still in the Puyallup area. And having a first time home buyer look right now, there definitely is a difference in 500,000 homes to 525 homes condition wise. It's very interesting. So that plays a part, but there is still a lot of homes, 500,000 and below, 475 to 500. Some are in a development, not a lot of yard. Some, are older homes that maybe have updates that do have a yard. So you just kind of got to pick your battles of what that looks like. But there is a lot of opportunity.
I agree.
And one home that they really liked will end up having multiple offers and going above list price most likely. And because it was fully remodeled top to bottom. And that's only going to be on the market for 5 days. So, buyers are really wanting the most they can for the top of the market of what they're looking in.
Yeah.
Most homes are selling from 0 to 30 days, which was about 70%. When I look at all areas, that's right around 70 to 80% of the market is really selling within those 0 to 30 days. So if you're not getting showings in that first week, you're probably overpriced, if I'm being honest. So you don't need to wait till that 30-day mark. The market's going to show you pretty quickly what that looks like.
Agree.
And then about another 20% is selling between the 31 and 60-day mark. I'm going to guess those are when other people are starting to do a price improvement, but that's really still 90% of the market. So if your home's been on for a long time, it could be you need a new marketing strategy. I have an appointment later today that it is a lot of that. It's overpriced, but marketing has played a huge part. into what that looks like and strategy for sure. So that's what's going on that end. Let's talk a little bit about rates and what's been going on the mortgage side.
Rates. So last week we had, well, the jobs report came in, and weekly we have a bunch of reports that come in and we watch them. And it came in more realistic than it ever has. Somebody got fired recently. I won't name any names, and some stuff's happening in the government, which is pretty amazing time right now because the rates have reacted and they've come down quite a bit. So if you were, even in some of these first-time homebuyer programs that have been in the sevens, there's opportunities to be back in the sixes.
Mm-hmm.
Is awesome. Now, it's very volatile. The best thing I can say with rates is we are really on an escalator going down very slowly. And then the rates on the daily market are like a yo-yo. Sometimes it's very low and it looks amazing and there's such good news, or there's bad news that helps drive the rates down. And the next day there's tariff talk and this talk and that. And next thing you know, it's back up over 7. So rates are just super volatile right now. And that shouldn't be the motivation factor of buying a home. I know that it
Mm-hmm.
can cause your payment to be more than you may want to spend at the time. But with the projections and everything moving forward of looking long term, they're projected to come down over the long haul as early as even May of next year. So, you definitely can take advantage of some no-cost refi plans and some other things out there that can put you in a position to, acquire that home with lots of closing costs, or, basically getting in for less than even, an appraisal these days. And then you can put yourself in a position where you can lower that payment in the future.
Awesome. Yeah, we were talking about it at our team meeting today, that mortgage daily news or whatever, it's been for the last week in the green every single day for rates. And that 7-day span has not happened in years. That it was actually,
2014. 2014.
yeah. So there that plays a huge part of things looking good in that right direction.
And there's one more thing I wanted to mention on rates that's huge, because I think it's a misconception and miscommunicated out there completely, is there's an advertised rate.
Mm-hmm.
It's usually a lot lower, because if the actual rate on the market is well over 7 or 8%, or most people go, yeah, it's too high, I'll wait, because they already have a low interest rate. But if they were advertising 4 or 5%, now it's like, oh, well, maybe we should look into it. So be careful. What factors, this was a question I got, so it's on the long of rates, is what factors determine what a rate does? And there are 4 factors. There is your credit score itself. That determines what your rate is. And the loan program you choose, because some programs can give a higher rate even if you have a great credit score, and can be a lower rate, like some of the first-time homebuyer programs. The amount of down payment is also huge. So if you're putting 50% down, that's the best, right? If you put 20% down, or you put only 5, you have mortgage insurance, and now the risk is higher. And then lastly is the specific lender you work with. If that lender isn't direct and doesn't have the right programs and products, or maybe hedges their rates a little bit, you may pay a little more based on what program or rate you choose.
Awesome. And
Yep.
really, it comes down to what is the payment that makes sense. And I think a lot of people get feared off of, just because of generational family input, friend input, whatever it may be. But at the end of the day, if the payment makes sense, you do it, because it is investing in your future for sure.
Yep. Agreed.
Awesome. So we wanted to talk about, I've gotten quite a few questions on what is earnest money in the transaction. So earnest money is a good faith deposit that you put down typically about 3 days after mutual acceptance, in a third party escrow account that gets held there. And essentially on the buyer side, you are saying that I want to move forward with this home in good faith, and putting that towards towards the purchase. Okay. So you can use your earnest money for closing costs. You can use your earnest money for a down payment, your down payment. Really, there's a lot of options of what you can do with it. Typically, it's about 1% of the purchase price. So if you're looking at a $500,000 home, it's usually about 5 grand, but everything's negotiable in a contract. But that is money that you'll need up front to put that. So if you're doing a zero down program and you're getting your closing costs paid for, those numbers and working through that, depending on, closing costs can be a little bit over what a seller's, most of the time you're going to get that back.
Mhm.
Your earnest money should be protected through your inspection contingency. So for some reason, if you need to walk away because the home isn't in the condition that you're willing to take it on for, as long as your agent is following their timelines. That's why there's a lot of really important reasons why you want to work with someone that knows what they're doing,
Yeah.
because it's not just about finding the home and writing the offer and helping out a friend or whatever it may be. This is like contract law, and you can get yourself in a lot of earnest money disputes, all of those types of things if you're not following that correctly. And really, at the end of the day, if you decide to walk away from the home because you don't like it anymore, the seller has the right to keep that earnest money. Obviously, consult an attorney, but contractually, if you don't have any more contingencies or your dates lapse or any of that kind of stuff, and you don't have an agent that's on top of this, you're putting that 5,000, 10,000, 7,500, whatever it may be, at risk. Now, some people will put down more earnest money to try to make their offer look better. I mean, there's a lot of different strategies to be done around that. But essentially, it is your good faith money and your commitment to moving forward with the home.
Yes.
So, can earnest money be gifted, Ben? Can
Yeah.
earnest money be a loan? Can earnest money, like what on the lending side, what does that look like?
So the first thing I want to just kind of reiterate again, you said is earnest money is credited towards the loan. So if you put 5,000 down and you were going to bring in 20,000 as your down payment, you now only have to bring in 15,000. And on the itemization or the loan estimate, when you get what the breakdown of the closing costs and the down payment and everything, it'll show EMD in there that you've put that down already as a credit. And your loan officer should be going over that in detail with you. Please reach out, and I can definitely help you if you're in a transaction and no one has. But the question you asked was, can it be a loan or can it be gifted? Earnest money has to be trackable, just like all funds that go into a loan. And when I say trackable, if you have cash under mattress, and they can't prove where it came from. Did it come from you as the realtor? Did it come from me as the lender? Did it come from some guy off the street? And if we can't track the money, we can't use
And your lender and realtor cannot give you earnest money,
correct.
FYI.
Yeah, that's why I said those two. So with a loan, okay, the only loan that you can do is a 401k because you're borrowing from yourself. You cannot go loan against a credit card, cash advance. You cannot go take a new loan out and use that. You can use a second mortgage against your home as long as the debt qualifies in your DTI, which is debt to income ratio, qualifying for that purchase. So to answer your question, there are ways of doing a loan, but no, you cannot just borrow funds from someone and use it as a down payment and promise to pay them back. You can get a gift as long as the giftor is a relative and there's certain requirements for that. Reach out and we can go into more detail.
Okay. Even if they're getting their earnest money back at closing because they're doing a zero down payment, down payment program, and their closing costs are covered, they couldn't get a gift from mom for that down payment.
They can't. It's a gift from mom.
Okay.
Correct. And
Okay.
so one strategy,
What
just because
about a
you
gift from my fifth cousin?
I don't have the exact guidelines in front of me right now. I don't know the names on there, but it has to be direct because most people, friends, and outside family members, or as long as you're super close, you'd have to paint the story. Normally, they expect the money back, and so the guidelines say that you cannot get a gift from
A
friend.
very distant, yeah, friend
Correct.
or
Yeah. So
relative. Yep.
it's that's a gray area. I'd have to look more in detail on it, and depends on, did they grow up together. I mean, there's so many factors involved in
Yeah.
that.
Yep, I just wanted to make sure because I know that there plays a part into that. But we do get a lot of questions on it, and sometimes people hold back because they don't have enough money for this or that. And I would just say, if you are thinking about it, let's have a conversation because don't let things hold you back that you heard from a friend or a friend or a friend because every real estate transaction is different
Mhm.
because there's different people involved, there's different houses, there's different loan programs. And so this is not an industry or something that you can take advice from your next door neighbor or whatever, because your situation is going to be different than theirs. And so make sure that you're talking to a professional about what that looks like.
So, and real quick, let's say you do actually get a loan or you get a gift from a friend that says, yeah, no problem, I'll pay you back. And you put your earnest money down and you didn't tell your lender or realtor that you did that. And they find out, right? How do we address that? That money can be refunded as long as the seller says it's okay. And then you could go get new money to deposit. Now, if you get all of your closing costs paid for, then that money is going to go back to you anyhow, and it wouldn't be counted in the transaction is the point I wanted to make. So there are ways of doing it as long as we're going to verify everything.
Yeah, well, and not all sellers are willing to cooperate. Not all people, like when you have a lot of different parties involved,
Mm-hmm.
they don't owe it to anyone or anything. And so when you're not completely honest up front or, sitting down with your agent and doing a buyer strategy meeting and discussing, with the lender, getting on all on the same page, how much closing costs do you have? How much, do you have in reserves? Do you have earnest money? What is the inspection cost, the appraisal cost? Like we sit down and go over every little detail with you so we know what strategy, because maybe we don't even want to go look at this house because it doesn't make sense to you and you fall in love with it. And, we don't want to set you up for failure.
Correct.
So really having a team and being on the same page is huge. So let's go into the do not.
Yep.
You had this week, do not pay off collections before talking to your rent, to your lender. Do not pay off collections before talking to your lender. Tell me more about that, Ben.
Do not do that.
Do not. Okay.
Yeah, do not. The main reason why is sometimes collections are old. They're still reporting, but they're maybe 1, 2, 3, 4, 5 years where they last reported. So the date was maybe 2021. And it's been so long, it's 2025. So the impact of that negative collection could be very minimal
Mm,
compared to if you go pay it off and it re-reports next month as a current paid collection. Now the impact and the percentage that it could affect your score, it could drop your points hundreds of points.
mm,
I've seen where people are like, we're going to pay off all our debt, and then they had 3 credit cards that were small amounts when they were young that they just never took care of, and they just were on there. They were small amounts, $300 or $400, and their score dropped 82 points and they couldn't qualify. So before you do anything, pay off debt, pay off collections, create a plan. If you have 10, 20, 30 grand sitting in your account and you have debt, obviously logic says pay your bills on time, don't miss any payments. But before you structurally say, what is the best way for me to purchase a home, invest in my future? Should I pay off this account or that account, or should I pay off debt at all? Or should I even, maybe, pay down half of them to a certain percent to increase my score? Reach out to your lender, have a conversation about how to optimize that and maximize your purchase power and build wealth.
yeah. And you may have a friend in banking or a lender that you've used for a long time. Again, it's not the same. This market is one that is different, and you need someone that's going to strategize with you and put a game plan together on what your future looks like. There's a lot of different products out there. Most lenders don't have all the same products. Especially a bank between a brokerage and all that. So, maybe you need to talk to a few people to see what is going to be the best fit.
100%. We are solution based, and we have your end goal in mind when we do this, not just the first surface level transaction.
Yes, exactly. Exactly. And then the last thing we're just going to end on, we just have a couple minutes, is how do you choose the right lender or real estate agent for you? That's it. 80% of people just go with the first person they met, a referral from a friend of a friend, a family member, whatever it may be. And so I wanted to discuss, Ben and I can add our 2 cents in, of how do you know, if you don't know anything about real estate, that they know what they're doing?
I would say the first thing that, I'm in real estate, so obviously, it's a little probably biased on this question, but I would say the first one is how many transactions and what have you been through? I think expertise is kind of what we go through. So if you've been in the business for 20 years or 2 years, if that person has done the same amount of transaction as the person who's been for 20 years, I would say that the expertise in between the two is probably very similar, because
Mhm.
depending on what they've been through. So it's questions like, how did you handle my situation? What are tips that I can do to get my credit improved, or accomplish the goal of getting my home at 525 or 600 when I'm only approved for 500? Or why did you choose this business? Just a lot of good questions, without just saying, hey, cool, you helped my friend, let's go, and just trusting someone because of someone else's word. It's truly connecting with them and asking questions.
Well, and like I said, every transaction is different,
Mm-hmm.
and personalities are different too. So one could have a good transaction, and they may not even know it was a great transaction,
Mm-hmm.
because really we're going to take the steps to make sure that you know what's going on in every step of the way. Our job is to really make it as easy as possible when it's already a really stressful situation. But going back to, yeah, are you working full time in this business? Because we can't try to communicate with someone that has a full-time job while we're trying out too. Now, that doesn't mean for everyone. I know a lot of people that are really successful that are working in a full-time job and doing this. And at some point, something has to give when you get to a certain amount of deals that they're working on. Um, and then ask for references. I would do that too. What's their reputation in this business with other agents? Because if you can't get your deals to look through for other agents, you're never going to be able to help your clients. People won't show your listings and they won't look at your offers. It just is what it is. Reputation is extremely important. And then how do you solve problems?
Yeah.
I think is huge. But going through, are they sitting down and doing a consultation with you on the buyer and seller side? Are they qualifying you up front? Are they asking questions and spending that time to get to know your motivation, your needs, your wants? What are their systems for that? Are they making sure that you know what's happening every step of the way? Do they have preferred vendors that they will refer to you and take that ease off? All of that. So, depending on if you're talking about buyers or sellers or what that looks like, it all plays a part.
Agreed. Agreed.
So that was it. It's 2:30. Thank you for Keanu and Clay for watching. You guys are the real deal.
Thank you. Thank you.
And come here next week, Tuesday at 2. I will be in San Antonio, Texas. So I will make sure that we get on though, because I think it's important that we continue to do these and keep you guys updated on what's going on in the market. If you have a specific question though,
Yep.
let us know. We can answer it on our live next week, or talk to you specifically. And anyone that shares this video or comments or likes, we greatly appreciate it. Feel free to share it with anyone that you know in Messenger that could benefit from the conversation we had today.
Yep. Thanks, guys.
Okay, bye.